Hello and welcome to Deal Makers. Well, 2013 may not be the year to remember clearly when it comes to the mergers and acquisitions, but it is not all that forgettable either, because deal conversions may be slow, but the hunger for activity is pretty much evident. So will 2014 be a hectic year for the people who make deals happen? And to tell us all about that is a special panel of those brave hearts who made a mark on the deal street in 2013. Joining us are Zia Modi, the managing partner at AZB Partners, V.S. Parthasarthi, the CFO and head of M&A at Mahindra Group, and Aisha Sequeira, the MD and head of iBanking at Morgan Stanley India. Welcome to the show, ladies and gentlemen. Starting with Zia Modi. With the kind of uncertainty that we have seen in 2013 from all possible fronts, well, is the M&A expected to pick up in 2014, and are there any signs of it already?
I think that probably M&A will be better in 2014 for the following reasons. One is that clearly we will have a new government, whichever party it is, and hopefully with a new mandate which will look to achieving quick victories in the short term so as to get the climate right. The second is that the deals that have been discussed this year, many of them are on slow train awaiting the elections. So once the elections happen, those will gain pace. The third is that sectors like healthcare and education are certainly seeing significant traction. And so to that extent, if people are convinced that those are the silos in which India will surely grow and give a return, private equity, strategics, financial investors will all look to that space. And then hopefully the fourth silo, which has to come, the only question is when, is infrastructure. When's it going to pick up pace? And with that will come a lot of M&A, consolidation in telecom, expansion in other sectors. So I believe that 2014 overall should be somewhat better than 2013.
All right, that's the lawyer's take coming in. Let's go to a banker's view then. Aisha Sequeira then. How busy are you with the ideas and pitches at this point? And are you more optimistic in the new year, or is a lot dependent on elections?
I think we will continue to see inbound M&A volume happen. The India consumer story, consumer play is something that people continue to be very interested in. So sectors that touch the Indian consumer, be it consumer, financial services, will see activity. I think outbound activity will be a little bit more muted. And for a real pickup, I think in capital markets activity, primary capital markets activity, you're going to, I think, really look to sort of the second half of the year.
That's right, but it is the big conglomerates like the Mahindra Group which will really move the needle in this direction. So what is the thinking at your end, Mr. Parthasarthi? Will big promoters like Mr. Mahindra will want to make a big move, or will wait it out at this point?
As a CFO and as a conglomerate, there are two things that we need to do. One is, as a CFO, I would always say, in times of churn, the best place to keep the money is in your pocket. However, on the other hand, there are many opportunities which present during times like this. The M&A in me then would say that this is the right time to look for deals which otherwise would not be there on the street, and therefore look at it. So on balance, I would say, as a conglomerate, we will always be looking for good opportunities, but we would not be very, very adventurous. The rest of the time, I will say, keep your cash in your pocket.
All right, if there is a mouth-watering opportunity, definitely companies will loosen their purse strings. But coming to Morgan Stanley again, Aisha, which sectors are showing more traction for an M&A play in the coming year?
I think it's going to be those sectors that touch the Indian consumer that will see the most interest, which is again consumer, industrials, financial services, pharma. I think infrastructure is one sector that clearly requires a lot of capital. There is a lot of potential. And my sense is people will need to see what the new policy is that comes about with the election, and people will wait for that before there's major strategic activity that takes place on the infrastructure sector.
Yeah, but coming to one sector which has seen a lot of buzz in the last year, that is the mid-cap IT space. Now, coming to Mr. Parthasarathy, with the scale that Tech Mahindra has achieved with Satyam merger recently, it is looking as the most aggressive and acquisitive company in nature. Am I right on that?
As far as acquisitive is concerned, as I said, as part of all M&M organizations, they will also be pursuing a dual policy of being selectively aggressive, at the same time retaining money in their pockets where they need to, given the uncertain environment. And they will be certainly doing their share, as does auto and auto components.
All right, and coming to Aisha then, Aisha, Morgan Stanley has a huge role to play in stitching a large deal in the IT space this year, the Bearings Private Equity's acquisition of Hexaware. So will this particular acquisition and many such activities really spur more mid-cap IT space M&A in the coming year?
So I think that is something, Nisha, that has been discussed for a long time. Mid-cap IT consolidation, we haven't seen that. There are always challenges from a valuation perspective or sensitivities from an employee and client side, from an integration point of view. I don't see, frankly, IT consolidation as a large thematic. Clearly, it could happen on a case-by-case basis, but as a large thematic, I don't see that as one of the drivers.
Right. Another sector is pharma, which has seen a lot of deals. Elder sold its brands to Torrent, Emcure stake sale happened, deal in Gland Pharma as well. But there is an issue of the compulsory licensing, and Zia Modi will throw more light on that. Zia, is this going to really impact pharma sector's M&A play?
In the pharma situation, I think, the arguments on both sides are quite loud. Big pharma is saying, how do we invest billions of dollars in R&D if we're going to have to sell our drugs for such a cheap price? There is a chilling factor in terms of how much more they want to invest in or are committed to the Indian space for the life-saving drugs, which are the later patented protected ones. Generic pharma is saying, read the Patent Act. India signed up to the treaty, the WTO treaty, on the condition that it would carve out an exception to compulsory licensing. Here's the licensing exception. It's in the section. You came to India, you read the statute, you knew what compulsory licensing was all about. And by the way, we have 1.2 billion people, and most of them are poor and can't afford health care. So you can see that the arguments are balanced really on both sides. Where the debate comes out, I think, is going to be in the marketplace. I think the trend has been for the Intellectual Property Board to allow more compulsory licensing. We've seen the Supreme Court uphold the compulsory licensing regime. So I think it will get more challenging for big pharma going forward.
Right. Another area in Mahindra Group which really looks acquisitive is the tractor business. Now, Mr. Parthasarathy, you looked at the European markets. Would you look at entering for a buyout there as well in this space?
Europe actually is a high horsepower market. In India, if you recall, our horsepower tend to be from a 30 horsepower or 25 horsepower to about 60, 70 horsepower. And China and US have conducive kind of horsepower so that it enables us to go to this market. Europe, on the other hand, is majorly a high horsepower market. So that is why we have left Europe alone for the time being. We will always look at opportunity to go into Europe in future. But that's opportunities presenting itself, and both the time and the economics being right.
One positive development on the regulatory front is easier international listing norms. And let's get a Morgan Stanley view on that. Aisha, are there any takers and which pockets could be interested?
My sense is that you will see some activity happen. It will take, again, a little bit of time. There are also businesses in India that have large international platforms where potentially branding is helped by listing some of these businesses internationally. On the other hand, pure domestic businesses where the currency volatility is going to impact the perception of the business internationally may not be the best candidate to take outside to list. So there are clear companies and sectors that are better suited for that, and we do expect to see activity happen over time.
And talking about international brands, well, coming to you, Mr. Parthasarathy. Now, Mahindra Group has been keen in this particular space. In fact, you had looked at Aston Martin also at one point as a brand that you could acquire. And of course, the acquisition of SsangYong also happened. So brands surely excite you in the auto space.
Brands is something that we need to look consistently. Mahindra provides us with a great platform. And now with SsangYong, that gives another option. But over a period of time, brand will always play a good part and a major part in any consumer industry.
All right. I'd known that brands are something that you would be looking at. And of course, your best competitors, Tata Motors, have a huge luxury brand in the international market as well. All right. Coming to the regulatory framework then, Zia Modi, coming to you. Everyone has understood the new animal which was in the M&A space, the Competition Commission of India, and its role in the M&A sphere. But the Companies Bill has brought about many more changes this year in 2013. Buyback, mergers are made more stringent. Now, how does it change the way you are structuring deals at AZB?
I think that the regulator and the government is of the view right now that the minority is not in a position to protect themselves. That we have promoter companies in India, for the most part, unlike professionally managed companies abroad, and that the promoters will swallow up, wrongly in my opinion, to have that view necessarily all the time, will swallow up the minority whose vote means nothing. And therefore, there is a legislative and a regulatory stepping in to make sure that they will try and tilt the balance the other way. And that is how I think the genesis of the Companies Act happened. It happened before. But right now what is there is the majority promoter will be unable to sway and swing the vote as much as he could before in M&A activity.
Definitely making it more difficult for the promoters. So let's get a corporate view on that. Mr. Parthasarathy, are these regulations really a deterrent for the companies like yours?
Now we have the new Companies Bill, and there are some very good aspects in that company bill. For example, now an Indian company can merge into a foreign entity, so which was not there earlier. And there are other things which are coming. So there are therefore some very good parts in this. And I think it's a continuum where we are maturing as a country in terms of these laws, enabling M&A, but also safeguarding investors. However, only Companies Bill changing is not enough. There are ancillaries and there are other parts of it like the income tax, etc., which also needs to change. The second part is that if there is a huge amount of activism like there is in US, then the investors tend to shy away from it, and that is something India needs to guard against. So on balance, I would say that these laws we are trying to understand, and we are waiting for the other parts to come through. In the meantime, it's going to create some bit of concern for the investors. So I would see these as speed breakers, but not necessary derailers for any investment opportunities.
There's another big change. Zia Modi, coming to you. How has the definition of control really changed now? We have seen the impact of it in the Jet Etihad deal, and also how would you really look at protecting the interest of the investor director without flouting the control angle when you are stitching a deal where the investor now has to come on the board of the company?
So if you take a control of an IT company or a manufacturing company, whether you take control or not is neither here nor there. But you can't really take control in a aviation company like the Jet Etihad deal and other such sensitive areas. So the question of control becomes important in those limited sectors. And I think in those sectors, because of the very wide definition that is now sought to be given by SEBI and the Companies Act, it would be very difficult for the minority investors to really have any significant affirmative voting rights without falling into the trap of, in hindsight, being seen to be said to be in control. And therefore, people are dancing very gingerly across this landscape.
Very well defined. So what is the situation finally on that front then, Zia Modi?
So, you know, it's a lawyer's delight but a regulator's nightmare and an investor's nightmare, and certainly that of the Indian promoter. How do you really fix in a definition which is by its nature having no bright line test? What is control from case to case? And I think that this is going to be a terrible distraction because you're ultimately going to get the government to sign off on what it believes every agreement says or doesn't say, which could never be the intention of the FIPB or the government. Are they really going to step into that stool and into that seat, and should they be?
Right, so those are the various nitty-gritties and the technical aspects which really need a lot of understanding going forward. But Aisha Sequeira, coming to you, one bright pocket at least for the year 2013 has been that the private equity space has been very, very active. Will it still remain as one of the deal drivers on the deal street for 2014 as well?
Yes, I mean, I think private equity exits are something that we expect to continue. There were a number of private equity investments that were made in the 2007, 2008 vintage. And, you know, as you would expect, the natural time for some of those exits to take place would be around now. So that is something that we continue to see both from an investment perspective as well as from an exit perspective.
In 2013, Mahindra Group announced a large alliance in the auto component business with Spanish firm CIE. Coming to you, Mr. Parthasarathy, is it the way forward to grow, to bring strengths together in a difficult macro environment instead of outright buyouts? And will this be the expansion vehicle for you going forward?
We bring somebody like CIE into the picture, which from an 800 million straight away catapults us to a $3 billion kind of a company with footprints across geographies, Asia, Europe and Americas, and that then would help us being a global auto components company faster and greater. And like you said, that also gives opportunity in terms of exploring more of this space. We would be the top 25 auto components, Mahindra CIE, because of this process, and we could look at expanding and also providing strategic support to M&M in its auto journey.
Right, the Indian promoters have always been very enthusiastic about the outbound deals. But what about the inbound deals? Zia Modi, coming to you. The foreign investors have been keenly watching out for that Vodafone tax issue that has been ongoing for a very long time. Now, do you think that this is a big tax issue overhang and the international community is still not convinced?
I mean, wherever I travel, I was in Japan last month, Vodafone. I was in America the month before, Vodafone. I mean, the amount of damage, the decision of the retroactive effect on Vodafone I keep saying it's not retroactive by the government, was unnecessary, according to me. Today, Mauritius is, yes, still considered as, by the government, with a queasy feeling. My own view is that people are right now going more to Singapore simply because they feel that the government will look at them in a more wholesome manner. Don't forget, the benefits in Singapore under the treaty there are only available as long as the Mauritius Treaty is available. And so you cannot have a situation where the Mauritius Treaty is taken away and the Singapore benefits remain. So I think we'll see a better handling of the situation, but I think that what will happen is that Mauritius, the investment will soon flow more and more to Singapore, in my view. And Mauritius will have to show that they can create and provide more substance in order for the tax department not to keep challenging.
Everybody, including foreign investors and also some of the Indian companies looking at foreign partners, are waiting for that particular issue to get sorted. Now, coming to you, Mr. Parthasarathy, For the Mahindra Group, how have you planned for any of the deals? How much kitty is set aside for M&A in the group?
In the next 3 years, we look to investing about 7,500 crores in our own capex and 2,500 crores as investments. When we talk about investment, this means investing in our group companies for the growth, both organically and inorganically. And it also has part of it as investment that we will make for acquiring companies. So this is a broad indicative figure that we have set aside in our planning cycle, 2,500 crores for the next 3 years.
But Mr. Parthasarathy, I'm curious to know, how have you set aside only 2,500 crore rupees? If there is a good opportunity, don't tell me that you won't go for more.
Okay, even as I was answering, I kind of said, oh, this is what the question I'm going to be asked. And I think you're absolutely right. M&As, when it comes, may not be planned, and the deal size cannot be, decided upfront. Just look at the way M&M has, flexibility on that front. Our debt equity ratio is 0.2, 0.3. So whenever a situation arises, it's always very easy for me to buy, take debt onto M&M's balance sheet and provide the cash. I also have investment which allows me that flexibility to encash some part of it and put in. And last but not least, some debt is always available as a need-based leverage buyout, not a greed-based, but a need-based leverage buyout.
With those positive comments, Mr. Parthasarathy, I'm sure that a lot of iBankers will be lining up at your office post this show is on air. Now, also coming to Aisha then, for your last comments, do you think that balance sheet is going to be one of the key drivers for M&A in the coming year?
What you're going to start seeing, and you've seen management teams and promoters do more of, is to really focus on core operations, and to the extent businesses are not core, look to either partner or divest some of those businesses. I think at the end of the day, for an actual deal to come together, a number of other things need to fall in place. But the need for companies to continue to strive towards strong balance sheet is only going to get more important, I think, in 2014.
Zia Modi, coming to you for final words. Do you think that distressed asset sales is going to be the theme for the next year, and M&A would be up and about because of that one theme?
I think you'll see more distressed assets on the line. You'll see banks wanting to have proper recovery proceedings. And so I think the opportunity there will be in this space of distressed assets in next year.
All right, so there is expectation of a lot of distressed assets on the table, and that is going to drive the M&A to some extent in India. So it's definitely challenging times, but the good thing is that there is a lot of hope for the new year as we start 2014 with gusto. Thanks Aisha Sequeira, Zia Modi and V.S. Parthasarathy, and thanks to our viewers for joining us on the special edition of Deal Makers.